The national average for regular gasoline up over 20 cents from this time last month. Against this backdrop, the XRT retail ATF, it's on pace for its worst week in over a year, down nearly 6% since Monday. But my next guest says there's one stock in that bunch that is actually well positioned from here and benefits from a depressed housing market, high gas prices, and high interest rates. That's Ollie's Bargain Outlet, our mystery chart that we showed you earlier on. Joining us now for more is Anthony Chukumba, Loop Capital senior analyst. Anthony, you see a 26% upside for the stock from here, and this really says a lot about where the consumer is right now. Down market, looking for deals and discounts.
That's correct. I mean, the macroeconomic environment is still highly uncertain. I mean, we're seeing some very strong indicators, right? Like that much better than expected jobs number today. But as you said, I mean, the housing market's still pretty depressed. Interest rates are pretty high. Gas prices are creeping back up. There's a lot of uncertainty. And so we think that plays right into Ollie's hands. Given that uncertainty, we think that consumers will look to trade down from higher priced alternatives. And they know they can save when they go to Ollie's Bargain Outlet.
Now, elsewhere in sort of the bargain space, when you look at Dollar General versus Family Dollar, they've been sort of moving in different directions in terms of expansion and closing down stores in the case of Family Dollar. Why is that? Where does Ollie's Bargain fit?
Yeah, so, look, we cover Dollar Tree, which owns Family Dollar, as well as Dollar General. Those models are a little bit different, right? I mean, they're 75% consumable, 25% discretionary. I mean, they're essentially like kind of small supermarkets. Now, talk about idiosyncratic. I mean, there's a lot of optimism at Dollar General because their CEO, Todd Vasos, has recently rejoined the company, and there's a lot of expectation he's going to turn the business around. The early results have been quite encouraging. With Family Dollar, they just can't sort of get out of their own way, and they did announce they're going to close a bunch of stores. But those are in a very different position now. Now, theoretically, they should benefit from that trade down as well. But both of them are having operational issues. Right now, Ollie's has no operational issues like Dollar General and Family Dollar do.
Anthony, I've spent a lot of time over the last year or so covering the rise of these Chinese e-commerce companies. Shein, more retail-oriented, but Temu is essentially an online dollar store with almost unbeatable prices. Does it present competition to an Ollie's Bargain?
I don't really think so. I mean, remember, Ollie's Bargain Outlet, it's a treasure hunt environment, and you really have to kind of go to the store to see what's in the store. And it's very difficult, if not impossible, to replicate that experience online. So I really don't see a Temu or Shein as a significant competitive threat to Ollie's Bargain Outlet.
Okay. Just on the broader retail space, it's been a very rough week. XRT on pace for its worst week in more than a year. What do you think is going on here at large? Is this a broader consumer slowing? Is it competitive issues, both?
So we've gotten a couple of, tough data points this week. So you had PVH, and they had their miss. Now, a lot of that seems like had to do with Europe, but then on top of that, you had Ulta Beauty talking about a slowdown, and that really kind of freaked some people out as well. And then obviously, if suddenly we're talking about maybe going from 3 rate cuts to 2 rate cuts to maybe no rate cuts, that's not necessarily seen as something positive for the retail industry. But a lot of this, when I look at the macroeconomic tea leaves, I think that they're overall, even though they're somewhat mixed, they're a lot more positive ones than negative ones. And generally, if a consumer is working, right, and we saw unemployment tick down and is making more money, and we've seen wage growth continue to be quite strong ahead of inflation, they're going to continue to spend.
Right. Resilient economy, resilient consumer.